Good morning, ladies and gentlemen. I hope you're all keeping very well. We have already heard quite interesting insights this morning. So a really good start to the conference. For those who don't know me, my name is Hartwig Gerhartinger. I'm Deputy General Counsel at Paysafe, and I'm also chairing the technical committee of the European Payments Institution Federation. And it's now a great pleasure for me to be the host of this panel session, which is about the topic which is very close to my heart. It's PSD2 and the upcoming review of this text. And maybe before I introduce the speakers, because I think Dirk is not here yet, I would like to, maybe take a moment.
Here.
Hello.
Good morning. I'm here. Hello. Hopefully you can see me as well.
Not yet, but you will be spotlighted once. Yeah, so I think, looking back at a moment in PSD1 was maybe one of the kind of flagship projects of the European Commission at the time. It really, I think, gave a boost to the payments industry, allowing companies to really roll out. I mean, despite all the kind of still difficulties we have, but it was a big leap at the time to actually create a single market and a big step forward for the industry. And it also gave common grounds for a non-banking payment sector coming together in associations like the European Payments Institution Federation. And now I think PSD2 came with the ambition to actually make something that is already working well even better. It was kind of an upgrade of PSD1 on a number of areas, and the high-level goals were really, increasing security in online electronic payments, reducing fraud, facilitate innovation and competition in areas that we now know as payment initiation services and account information services, and also to increase consumer protection and enhance some of the supervisory prudential areas. So I think while everyone agrees with the overall goal, yet PSD2 has led to maybe unprecedented in an unprecedented way, really, to controversial discussions and to a number of really heated debates on a number of questions, really. And I think there was a lot of questions around, like, has it struck the right balance on the key topics? Has it really achieved its goals? And I think the debate around PSD3 is as old as soon as PSD2 was actually passed as a legislative act. So these and many more questions, ladies and gentlemen, we are going to discuss now with my distinguished panelists. And so please join me in welcoming Eric de Colombier, who is head of unit retail financial services at DG FISMA at the European Commission. So welcome, Eric. Dirk Haubrich, who is head of conduct, payments, and consumers. So it covers everything in his job title already at the EBA. Welcome, Dirk. Fanny Rodriguez, who is head of public affairs and open banking partnerships at Banking at Bridge, as heard already from your CEO this morning. And then Marcel Frick, who is Chief Financial Officer at Paysafe, and also at the Chief Financial Officer of EPIF. And suffice to say that Fanny is also at the board of EPIF. So welcome, everyone, and I'm really pleased to have you as my guests today. So let's take a moment to reflect on PSD2 and whether it's met its expectations. Maybe just, Eric, I would like to start with you, maybe. And as I said, we will go into the specifics in a moment. But just from a 30,000 feet perspective, how satisfied is the European Commission with the outcome of PSD2?
Good morning, everyone. Thank you very much for the invitation. Very nice to be here once again. If you invite me in 1 year time, probably I will be in a better position to tell you what is our, if you want, feedback about PSD2, how successful it was, because we are now engaged in a review of PSD2, whose objective is precisely to enable us in the Commission to respond to the question you just asked. But of course, I'm not going to completely ditch the question. We of course have a certain perception about PSD2, although it is still relatively new. We also know that some of the key elements of PSD2 took a bit more time to be fully applicable, to be fully enforced, but now hopefully everything is in place. It has taken a bit longer than expected, but it was a complex and challenging task for many. So yeah, point well taken. In terms of the lessons we draw, on the open banking front, although we did not have any quantitative targets, if you wish, but we are satisfied to observe that hundreds of fintechs, hundreds of TPPs have emerged as a result of PSD2. I know that some of them, and Fanny is certainly well placed to know that, but I know that some of them were present before PSD2. So some could say that PSD2 was there because of them and not the other way around. It's a bit, the two things are true. But what is also true is that there are many new kids on the block that have appeared as a result of PSD2. And that is very good. The EBA has a register which indicates that I think about almost 500 fintechs are out there providing the newly regulated PSD2 services, account information and payment initiation. So that is certainly a good result. That is certainly a good result. Although, as I said, we had no target in terms of numbers, but 500 is certainly good. In terms of another objective of PSD2, which was to combat fraud, essentially through SCA, well, here too, I think we can already be pleased to see, although we have to take this, of course, with a pinch of salt, because SCA is only a new reality only for the past months in most member states. So we have to take that with some care, but we can see already fraud rates decreasing, and I think Dirk and the EBA came up with interesting figures earlier this year. I think it was in June, based on an industry survey they did. So that was encouraging, but we should not be complacent. I mean, it will take time. It will take time, but we are on the right track, I would say. That being said, I repeat, we should not be complacent. We are still well placed in the Commission and in other authorities and bodies to know that there are still people slightly frustrated about PSD2. That's a fact. People who had high hopes for PSD2, and although PSD2 has regularized and legitimated their activities, still some of them, especially those who were there before PSD2, would always compare what they have now with what they had before. And I know that leaves people sometimes frustrated. We admit that there are still obstacles that remain, because there were concepts and principles in PSD2 which might have been differently understood and interpreted. So with the EBA, we've been very, very active through a myriad of tools, opinions, guidelines, Q&As, to try to shed some light. But I know that in spite of that, there are still questions in the marketplace. And this will be one of the challenges of this review. That will be precisely to look at what still needs to be, improved, and define what needs to be done. We never said PSD2 was perfect. PSD2 was great. It was incredible when you think about our predecessors, when you think about what they already envisioned almost 10 years ago. It was very visionary, but in the past years things have changed. New services have emerged, new actors, new providers have emerged, maybe new risks have emerged. So we will have to draw all the lessons from that. We'll have to examine both the past with this backward-looking review, but also think about the future with a more forward-looking aspect and see what, if anything, needs to be changed. But we are taking our time because this is complex. I mean, someone said an hour ago that PSD2 had about 100 pages. It's almost true, but it certainly has 100 articles. So this is not going to be done in 5 minutes, this review. This will take most of next year. And in fact, we have already started, and it will associate, well, the market, the EBA. It will, everyone will have a say in this process. And we are going to follow scrupulously the better regulation tools that we have, calls for advice, public consultation, study, etc. So we are going to do it by the books, and hopefully in 1 year time, if you invite me for the 7th EPIF payments conference, I might be able to tell you more about the outcome of all this and what will come next. But for the moment, we know that there will be some key pillars of this review. Supervision, level playing fields, as I said before, new actors, new services, maybe new risks. We'll have to examine the relationship with other instruments, END, MiCA, the future new MiCA rules, maybe AML. PSD2 is at the confluence of many things, so that will also have to be examined. We'll, of course, examine the open banking experience of PSD2, which was a game changer, which was a world premiere almost. So, and we are going to reflect whether we should expand this open banking experience in a broader fashion, maybe towards open finance. The Commission announced last year that it would do so in 2022. But of course, that must be done in close parallel with the PSD2 review, because it would be bizarre to build further levels of data access without having drawn all the lessons from the from the first experience we had, which is PSD2. And we will have, of course, to examine all the the provisions in PSD2 about fraud, about consumer protection, about SCA, liability. To see if they were right. They were certainly right at the time, but are they still right now, knowing what we have what we have learned since PSD2? So all this are, if you wish, the main features of this review. But of course, I'm happy to come back to some of these elements in the panel and maybe in the answering questions. But thank you. Back to you.
Yeah, thank you, Eric. No, that was a very good tour d'horizon, and obviously you published some very comprehensive strategy papers as well last year. So I think it's good to see the full picture, and we will certainly have time to kind of double click on some of the areas in this session too. So Dirk, maybe now let me turn to you. I think I've read the EBA celebrating 10th anniversary this year. So congratulations to the EBA. I think obviously with the role and significance of the EBA has increased in many areas, payments too. I think in PSD2 already the EBA has been given in total 13 mandates to develop, I think, six regulatory technical standards and 7 guidelines in a very short time frame. I think in 12 to 24 months, obviously on highly technical areas. Some of them were really controversial. I think you've seen even for the EBA record numbers of consultation responses. A lot of work has gone into understanding the different aspects and the different positions of and the sometimes very conflicting positions on some of the areas. Yeah, I would maybe now ask you the question. So how was that time for you? How did you manage all of that? Plus, also, it was a very it was a long process, which in some areas took a bit longer than expected due to the workload and the sheer complexity of the topics. So what would be your, let's say, recommendations for PSD3 in terms of process on how to tackle these areas? So Dirk, over to you.
Thank you, Hartwig. I hope you can hear me. Thank you to the organizers, to APIF, for inviting me to speak. It's a pleasure. I think Eric responded to your question, I think already in a rather all-encompassing way. I think that there are not too many things that I could add. So I would probably just flesh out some of the things that he was referring to already. And maybe I'll start with something that relates to the previous panel, where comments were made about the API interface and also about the length of the PSD2 is 100 pages, is too long, and the future wish is to reduce this so it's easier for financial institutions to follow and comply. One of the reasons, first of all, it's not just 100 pages of PSD2, as you will probably all be aware. To those 100 pages, or rather 100 articles, it's 115 or 118 articles. There is a very large number of additional pages that the EBA created because it was mandated to do so, but more importantly, because it was requested to do so by the industry. So the same industry that we've just heard wanting to have less text actually approached us, and this includes actually the type of institutions such as the card schemes that we heard earlier, to provide clarity on particular aspects, and we provided that clarity. In some cases, we proactively provided that clarity because we already saw that the industry that has just called for less text to be written, gaming that text in the PSD2, trying to avoid it, trying to define business models in a way that they wouldn't have to do X and they wouldn't have to do Y, thus undermining the actual intention of the PSD2 as laid out in the PSD2 and its recitals. So we were forced to intervene and provide certain clarifications so it is clear how national authorities and the EBA are supervising the PSD2. So the wish list about less text is a valid one, and it's genuinely one that we try to adhere to as well, but there are instances where actually the industry itself demands or requires us to provide those clarifications in order to ensure what is in and outside of the scope of PSD2 and what requirements need to be complied with. One of the experiences, Hartwig, that I would mention in response to your question, how were the last 4 or 5 years tight deadlines, and there were some delays. I'm not quite sure whether there were some delays, because with the exception of one RTS, which is a rather arcane one and not of direct relevance to the industry, which is the RTS on home host coordinations, or the coordination between home and host authorities, which is rather removed from the industry itself. All of the technical standards and guidelines were developed by us within the time frame that was set by the legislators, the Commission, the Council, the Parliament, and the Commission. So we didn't have any delays there in what the EBA did. We had quite a few delays in a couple of areas where the industry was late in complying with those requirements. And that is a huge lesson learned for us. The inability, and I repeat, the inability of the industry to get together and make sure that everyone is able to comply with the requirements imposed by the directive has been striking. I mean, I'm referring here to, in particular, and because we heard the card schemes earlier, particular to a strong customer authentication for electronic card-based transactions. Most of the members here that are participating in this call are aware of the issues that despite November 2015, the PSD2 being published and announcing that two-factor authentication or strong customer authentication would be required, the industry was not able to actually set it up within 5 years. And that's despite the fact that the EBA actually, prior to the PSD2 coming into force, already 2 years before issued guidelines under PSD1 that already introduced a light touch version of strong customer authentication, so that the industry has even more time to get ready, and still they failed. So this is quite a key lesson learned. There was a delay, a major delay, and one of the things that we are interested in seeing in the PSD3 is whatever the changes that the PSD3 may or may not bring about, that sort of delay in compliance is avoided, is prevented, and that measures need to be taken in order to make that happen. Other than that, the 4 or 5 years, of course, we're very busy. The PSD2 is not the most important and not the most extensive piece of EU law that falls into the scope of the EBA. Hartwig, you correctly mentioned those 6 technical standards and then 7 guidelines that we developed under the PSD2. In total, the EBA has issued more than 180 technical standards and another 70 sets of guidelines. So just to put that into perspective, but it's so it's not the biggest fish in the pond for us, but it's a very important fish that's in the pond swimming around there, because it has a very unique objective, the PSD2, which is to enhance competition, which is not one that we have so explicitly articulated as the PSD2 has it, and that creates, of course, problems or rather challenges in respect of the various fractions of the industry that are competing with each other, and of course the third-party providers, and we have Fanny here representing the third-party providers being those new entrants to the market. And I said at the beginning, for those of you who have been around for a while, when the whole process started, is the aim of the EBA is not to make anyone happy, not the banks, not the TPPs, not the card schemes or anyone else, but to make everyone equally unhappy. So to distribute the burden fairly across the various warring fractions, although the warring fractions that has slightly become toned down over the years, thankfully, because the TPPs more and more started to cooperate with the banks and trying to find solutions, which I think is a very valid thing to do. But it is the case that in one particular area, these warring fractions and these delays that were created might be able to be avoided in PSD3. We'll have to see. And I'm referring here to account access and the obstacles to account access that we still see today. Some banks, quite a few banks, putting in place of TPPs. That is absolutely unacceptable. It could have been avoided if the EBA had decided to impose one single API standard for 3 years ago when we developed the RTS. There would have been benefits from that as well. And I think it was briefly mentioned earlier in the panel. We had a keen interest in the API at the time, 3 or 4 years ago. No one had a great interest in the API, but we had an interest in a single API, because it would make sure that it's not only those TPPs that already existed in the market at the time of the PSD2 and our technical standards would have easy access to the market, but also the new entrants that were actually not on the scene yet, because of course there's a competitive advantage of those TPPs that had already operated in that gray area for many years prior to PSD2, because they had already adapted their IT system in order to be able to access the different interfaces of the many banks in the EU. And of course, a single API scheme then levels the playing field for all new entrants, not those that were just already there. And that would of course have been fantastic to achieve, but it wasn't possible for reasons of time. Hartwig, you alluded to it. We only had 12 months to develop the technical standard, and that was already challenging. I think we overran it by 1 week at the time in January 2017, and then to include already specifications for an API standard at the time would have just been not possible. And you can already see what the industry has been doing since then, because there are various API schemes in place, and they are still not finalized completely. They are still a work in progress, and there are 7 or 8 of these schemes around in the EU. And that is a price we were willing to accept, because we said, okay, we cannot do it. We are probably, as a public authority, also not best placed to actually develop those specifications for an API, for a single API access. So let's leave it to the market. One of the objectives of the PSD2 is innovation and competition, and that applies also to the API schemes. So let some of them start, which creates some issues at the beginning, but hopefully over time, the most effective, the most suitable, the most convenient, and the least costly access scheme will hopefully survive and will become the standard. So that was our assumption, and we try to facilitate that process by establishing an API industry working group where we had 30 representatives, 9 TPPs, 9 banks, and 9 API schemes that we asked to raise issues with us in the whole process so we can address that. And that's what we did over the last 3 years. We then, as some of you, and that's my concluding remark, as some of you are probably aware, we came to the conclusion that from one of the issues raised by the API industry working group, that our RTS, the key RTS that's most controversial, the RTS on strong customer authentication and common and secure communication, henceforth referred to as the RTS, that it probably needs to be amended in one particular aspect, which is the 90-day exemption to strong customer authentication for account information service providers, in particular when they are when the accounts are being accessed indirectly. Sorry. So here we came to the conclusion that actually our RTS, because of advice that we received at the time about what the nature of these exemptions should be, actually in this particular exemption, all of the exemptions work exactly as they were meant to, but with this particular exemption, it doesn't, and we need to amend it. And a consultation paper was issued by us a few weeks ago, and the consultation period is running for another 10 days or so. Where we're going to make amendments and where we're going to hopefully make this a bit more acceptable to TPPs and remove that kind of issue for them as much as we can legally do. What was interesting over the last 2 weeks since we published the consultation paper, I've been attending a few conferences, I've had a few discussions with various people, and what was interesting to observe was that as a first response to those proposals of us to amend the 90-day rule, there were, of course, some arguments against from the banks, at least those banks that are still somewhat behind the curve, arguing, oh, this should not be done in RTS, this should be done in the PSD3, which is basically meaning to wait for another 4 or 5 years. We have so these sort of arguments, of course, are well known to us when a particular stakeholder group is unhappy with the content of our proposal. What they are then arguing is that the legal process is not the right one, and a different process should be used. But that's of course nonsense. What we are doing is absolutely the right thing to do. Then we have concerns from others, such as consumer associations, who are very worried about the data protection aspects of granting easier access to account information service providers to the bank account details. And that's a valid concern, but we've put in place all the necessary security and guarantees and safeguards for that not to be able to be abused. And at any rate, AISPs, account information and payment initiation service providers, also are of course now authorized entities. So if there was really something going wrong, then these would be very heavily sanctioned, these entities. But what was a bit more interesting to see is the TPPs themselves, and that's my concluding sentence, the TPPs themselves and their initial reaction to our proposal, which was in most cases negative as well. So that was a bit surprising. Some TPPs seem to be of the view that just because their wish list is not being fulfilled, there is something really wrong with the EBA. There isn't anything wrong in the EBA. We do what we can do within the legal constraints. Anything else needs to be done through PSD3. We've articulated that explicitly in the consultation paper, that other things are conceivable but not possible legally. But it's not to the liking of those TPPs. So we hear already TPPs complaining that it's not enough, and we will have a careful look at those responses that we receive in response to the consultation, because we have no issue in, and we've done it in the past, that all the respondents to a particular consultation were against a particular set of requirements, but we implemented them anyway because we had reasons to do so. For example, one of the examples is the one that I referred to earlier, the guidelines on security of internet payments under PSD2 in 2014. I think every single respondent that replied at the time argued against it, but we did it anyway because we wanted to reduce fraud earlier than the RTS, which was meant to be applicable in 2018, but the industry didn't even manage it, so it was end of 2019. And also to give the industry a bit more time to actually get used to SCA, and that failed also, unfortunately, as I said earlier. So we did this once, that we implemented requirements against basically everyone who responded. We can do that, that's not a problem. But with this particular RTS, it has a particular aim, which is to make life for TPPs easier. And if the TPPs themselves complain about, oh, this is not good enough, then we may actually come to the conclusion that we are not going to amend the RTS eventually. So that we are going to stop the process and say, thank you very much for the feedback, very valid concerns. We seem to be proposing something that is not to the liking of TPPs, so we'll stop the process and we'll leave the RTS unamended. So that's an option that we will be considering. We've done that in the past. We've issued once a consultation paper on guidelines that we wanted to issue, and we looked at the responses, and there were some good arguments in there to actually say, no, we stop the process. We are not going to finalize these guidelines, and they will not become requirements. And that's what we did. And it's maybe something that we'll have to do for this RTS as well, because it's an interesting sort of kind of reaction that goes exactly against the intention of this amendment. If those that are meant to benefit from it are complaining that it's actually not good for them, then maybe then we had a wrong proposal. And with that, I conclude. Thank you very much.
Yeah, thank you very much, Dirk. It was a equally high-speed summary.
Sorry.
No, that's all good. Thank you very much. But just one question, because I mean, remembering some of the discussions that happened, over the past, let's say, 3 years in the, in the hot phase of defining the RTS and so on. I think a lot of the thoughts that only came up, a lot of the concerns only came up once you enter into the detailed discussion. So, and in some ways, there was always this concern around, yes, I understand this point, but PSD2 was, that's the mandate and that's the scope. So was in some cases, I mean, just very brief answer, please, too narrow? Would it have been better to have a broader mandate or more guidance, or a kind of easier way to revert back to the legislator? Because I think this is exactly what happened. I think in PSD2, everyone knew there was strong customer authentication requirements. Everyone had this standards on secure online payments in mind. I think a lot of people were happy with them, but yet it kind of changed the picture once you entered into the into the detail.
Yeah, I think that's a good question, and of course it would be as a public authority to say, yeah, make the mandates broader so it's easier for us to actually implement it, and have more flexibility in setting it out. But on the other hand, we are not, at least when it comes to technical standards, we are talking about law, directly applicable law in the EU. That's what a technical standard is. It doesn't require and does not need a national implementation or national transposition. So we are writing law, but we are not elected. We are not elected by the population. It's the Council and the Parliament, and the Commission has a right of initiative that are the legislators. So difficult political decisions need to be made at level 1, need to be made between the Commission and the Council and the Parliament. We do not want to interfere. And there is a risk that if you define a mandate too broad, Hartwig, that we then actually make political decisions and might even go against the political preferences that have been articulated by the legislators and the Commission at the moment when a particular directive is implemented. So in that sense, it can backfire as well. And I think with the RTS on strong customer authentication, we had such a half of a hot potato being thrown in our lap, because lots of issues were not sorted out in PSD2. With the account access, there were some inconsistencies and other things, and we had to sort it out. And in the process of sorting out, we did actually have to make some politically minded decisions that we actually didn't want to make, but we were required to make. So no, I wouldn't want to say we need a broader mandate. We need clearer mandates. And a really proper consideration of all things before the text is finalized.
Okay, that's very clear. Thank you, Dirk. So obviously, let's have a view what the industry says. Marcel, allow me to turn to you. Obviously, the industry had great hopes in PSD2. Increased competition, innovation. Have those hopes come true from your perspective?
I'm unmuting. Yes. Thanks, Hartwig. For most of the times, I think it did. PSD2 is pretty much supports technological developments. We are a fintech, but more tech than fin. So it was for us quite easy, since we're also PCI compliance, where there's a lot of technological requirements already to implement the PSD2. We see the high level objective. I think we all support that: the increase of security, the reducing fraud, support technological developments, and less risk-based. But what I see mostly is that there's less risk-based approach, in our personal opinion, even though there's a clear liability. So for us, we were very concerned by FCA. We've had this discussion many times. It's for me very, very interesting to hear what Eric and Dirk have to say about that as well, because it gives a complete different perspective. But looking at the PSD2 itself, for us as an organization, we see that the SCA requirements reduce the speed in the transactions. We do a lot of transactions also in the high risk world, and we are this risk management company as well. We know exactly where the risk in those transactions are, and we see a very, very much lower conversion for merchants, and I think that's something that's not good. On the other hand, the fraud reporting requirements and the more information that we had to provide also gave us very interesting insights and made us more focused on even more focused on where the fraud is coming from, and look at the developments to understand how that works. Anything you build or create can be built around by fraudsters. So with a full FCA, we are not there, because there's always a way around it. So you have to keep your eyes open to what happens in the world. And the fraud reporting gave us very interesting tools to continue to look at what was happening. For ourselves as an EMI, we have the ability now to provide a complete payment service to our customers. So we issue IBANs, we issue debit cards, but we can do it in a way that the customer wants, open banking, and basically in line with their wishes. If they don't want to be supported by us, but they want to be supported by Apple or Google, it's up to them. That's what I really like. I think it's a very cool thing that the chip of your credit card can now also be in your phone. I mean, who could have thought about that 10, 20 years ago? I'm very happy to learn that the Commission will take time to review PSD2. I think there's a lot of positive things in there, and there's also some things that needs to be discussed further. It would be a pity to see SCA, for example, develop into the cookie law we had a couple of years ago, where everybody has to click to access a website to provide consent that the information is being used, and now everybody's complaining that they have to click all the time. So it has its pros and its cons if you put regulation on a certain system that already works. Well, one thing that for us was very interesting to see is that as an EMI, we are part of the Banking Information Reference Portal, and we were able to connect to that in 4 to 5 days. The testing took longer than the connection itself. And I think that's a proof that the technological companies are ready to join the payment market as well. That's my 10 cents on PSD2, I guess.
Yeah, thank you. And I think Marcel, we will come back on some of the fraud questions later on, and SCA. But let me move on to Fanny now, for also last but not least, obviously, share your thoughts on PSD2 and whether it's achieved, and what has particularly worked well, or what you're still missing from a high-level perspective. Fanny, over to you.
Yes, thank you. The line was just cut when you spoke. So can I ask you again? Sorry, the question, it was, can I
just your views on PSD2, like high level
Okay, thank you. Really sorry, it worked really well until I had to speak. First, thank you, Hartwig, and I would like also to thank EPIF for the invitation to this roundtable and to congratulate Afore Consulting for the great job they are doing concerning the organization of this conference. Maybe I would like to give a business feedback more and not just legal feedback about the impact of a PSD2 on a fintech like banking. As you, Eric said, the more fintech you have, we have more fintech thanks to the PSD2, and it's true. And I think the more fintech you have, the best it is because you have competition. And the purpose of a firm, I think all the firms, is to propose the best services to the clients. So I think it's nice to have more competition. The impact of the PSD2 of a firm like banking, it's quite simple. Banking was a small firm created by students to allow them to have a general view about all their bank accounts. And it was a firm which were not regulated at all. And with the PSD2, this firm became regulated. So it means this firm had, it's just concrete, but it's just the real life, if I can say so. This firm has to ask for an agreement. It was new for a firm which were not regulated. Discover a meeting with regulator, had to provide reporting on this activity. Banking and Bridge are providing information of bank account, but also payment initiation. So in fact, this small firm created by students became a payment institution and has to develop, of course, compliance control, risk control. I come from a bank, and I was surprised when I arrived. After 1 month, I said, everybody told me you will have a big shock moving from a bank to a fintech. And in fact, I had a big shock, but not the one I thought, is that I had the sensation to be in a bank, just to be clear, because it was almost the same thing with compliance department, risk department, security at all the levels. So I think the main impact on PSD2 is that this small firm almost became regulated entities. And the way that works, it's like all the regulated entity. It can be credit institution, payment institution, but the way they work is that now they are regulated. So I think it's the main impact for a firm, and a huge impact. And I was surprised in a good way that a firm can be created non-regulated and become really fast used to the regulation. Of course, you also have concrete impact on the IT, because the PSD2 is not just you become regulated, it's also the way you have to provide your activity. So before the PSD2, it was just connection to bank accounts, as it could be done the way the firm wanted to do it. After the PSD2, you have to set in place authentified connection. So the firm has to ask for IDAS certificate and to check which is bank, if the interface to access to the bank account, it was the client interface, or if it was an API. So it's a big impact, as it takes more maybe than 3 years of work to move all the connection we had, which were not authenticated and which were on the client interface. We have to migrate them into mostly APIs. So now it's nice because it's almost the end of the work, but it was a big job to do for the IT department to transform the activity to make it compliant with the PSD2. I think it's nice now the way it is done, because it's more transparent. It's clear for everybody, for consumer, for bank, for TPP. We are regulated. When we access to bank account, we sign. So the bank knows it is us. It's not, the bank doesn't have to ask itself if we are the client or not. It's clear. We are regulated. We are authenticated, and we are controlled. So I think it's nice, but it is a great work. Also, it costs a lot. especially for small firm. And during that time, of course, you had less innovation because you cannot do both, migrate and innovate at the same level at the same time. Of course, we continue to have innovation, but some IT developers were used to migrate and not to try to make the new product. So I think the PSD2 has to end now, and we really have to be able to spend time to do our job, which is to create and not just to be compliant to a text. I would like to say also that, of course, the PSD2 impacted the initiation of payment and not the information of bank accounts. So we in France, you had banking and bridge, but also you in general had more aggregators than payment initiators. But the positive impact, because we always of the PSD2 is that thanks to the PSD2, it was possible to develop payment initiation activities in France. Before it was not the case because the interface of the bank were not done to favor the payments, the credit, the direct debit. It was not done for that because in France you have a huge history concerning cards, so the bank are in favor of the card model, and so the interface of the bank was not done to provide the initiation of payment. And thanks to the PSD2, it was possible to discuss with the regulator and to the bank to develop this activity. What we can say also, and maybe I will end by that, is that, sorry, someone used my bell, but I won't go there, of course, is that the PSD2 impacted also banking and bridge concerning AML, and it was most difficult because we were quite impacted by AML and KYC in France, as the regulator said, now you are a payments institution, so you have to comply with AML rules. And why not? But it's not the same case in all the European countries. So French TPP has to comply with this, but it was not the case for all the fintech in all the Europe. And I would like to congratulate the great job the EBA done, and it's quite sincere about the great job the EBA done on anti-money laundering, and especially on the guidelines that the EBA provide, guidelines dated from March of this year, because the EBA tried to explain what the regulator expects from the fintech concerning AML, and try to make it equal in all the European countries. And it was really, really great job because it was not just general rules which are set up in these guidelines, but also the EBA did the effort to provide dedicated guidelines for each activity, and concerning the activity of the fintech, which are doing information of bank account and initiation of payment, we have a guidelines 18. So it means EBA spent time to write 2 pages to explain us how it could be, how the ML could be performed. And I think it's one of the first time I see a regulator taking time, not just especially EBA, to write general guidelines, but also to have 2 pages activity per activity to try to make it easier for the business. So I wanted to say it. Once again, AML, it's important for French TPP, as our French regulator said, as payment institution, we have to comply with it. So it helps us to have this general EBA guidelines at a European level, and with a generic part, but also a more concrete part. After, of course, maybe we don't agree with everything. I would say we have to perform customer, what is supposed to be simplified due diligence. And the problem is that simplified due diligence, maybe we can speak about it later, but it's really, really costly and heavy. So maybe it's not enough simplified for small firm. It's a lot of money, but at least the EBA did the effort to provide this, to harmonize the rules, and to adapt it to each activity, and it was really nice.
Yeah, thank you, Fanny. I think that maybe concludes the first round. It was already a lot of detail on some of the topics, so I would like to now start double clicking on some of them, and I would like to start with exactly that topic now. On the AML side, maybe one, and then two, you know, on the on what Dirk mentioned earlier about the 90-day consultation. So my experience with Dirk is you always have to be careful when you say congratulations or you thank him too much, because he can take that as, oh, maybe we have done something wrong, we have maybe made someone too happy. But maybe Dirk, you can comment on you know what Fanny just said.
Yeah, so no, I have no problems with the industry. It doesn't happen too often that the industry ever says anything positive about a regulator, and that's part of our job description, and I have no problem with that. But I equally don't mind at all if there is some praise for the regulator from the industry. And no, I don't necessarily interpret that as us having done something wrong if the industry praises us, because apparently we have been too light touch or whatever the concern could be. So no issue whatsoever. But it's absolutely right what Fanny said. In guideline 8, so the guidelines that Fanny is referring to are the guidelines on AML risk factors, which is a rather large set of guidelines where we basically set out how AML should be implemented, AML requirements should be complied with for each particular industry sector, investment firms, payment service providers, and then we have one particular set of guidelines, guideline 18, which is specific to account information service providers, i.e. the TPPs. And there is admittedly, I think in the AMLD, given, sorry, I should slightly rephrase that, given that as an AISP, as an account information service provider, for example, you are now also a payment institution, you are automatically under the AMLD, you are an obliged entity under the AMLD, and there are a couple of requirements for that reason and for other reasons that apply to AISPs. But a valid argument can be made that actually, given that the AISP never holds the funds, the risks, the AML risks that arise from this activity are somewhat lower than for other sectors. But the AMLD says what it says, so we cannot alter that. That's again a matter for the level 1 text to resolve. And in the guidelines that Fanny referred to, in guideline 18 of the AML risk factors, which we issued in March this year, we basically clarified and somewhat toned down the requirements that apply to AIS, but we could not remove them completely. It's legally not possible for us, similar to some of the unrealistic wishes that some TPPs have about account access and delegation of SEA and similar things. Removing those requirements for AIS is not within our gift, so we did the most we can within the legal framework that exists, the AMLD, and that's what our guidelines say, and they clarified across the EU. We'll have to see which national authorities actually will comply with the guidelines, because the tightest legal instrument we can issue out of our own initiative, most of you will know, are guidelines. So we cannot develop a technical standard which is directly binding across the EU. We cannot do this out of our own initiative. We have to be mandated. So guidelines is the best we could do as a legal instrument, but there is a possibility for national authorities to decide not to comply with guidelines. And then they do not become applicable in that member state. So we'll have to see the notifications. I'm not quite sure whether we have received all notifications for these set of guidelines, and then of course how the national authorities are supervising this particular guideline.
Thank you, Dirk. And maybe sounds like a question for Eric, maybe not specifically in your remit on the AML, or not only, but in terms of, you know, what Fanny raised, you know, concerns around having to do KYC and maybe, you know, collecting information high level for, you know, TPPs, which are actually neither touching the funds, nor forwarding them. is that something you have on the radar? I mean, maybe for the AML package as a topic that you may want to kind of see addressed there? I think you're still on mute.
Yes, yes,
yeah.
yes. Thank you. Well, as you will know, and many others will know that as well, we just proposed an AML package in July. So we're not going to do another AML package anytime soon. So all the answers to your question, at least seen from the Commission's perspective, are in this AML package, which contains a proposed directive, proposed regulation, etc. So, I mean, and if you look at this package, you will see that we haven't introduced, or we have not proposed to introduce a significant change to the existing legal landscape for AISPs and PISPs. That being said, this is a package proposed by the Commission, and it is now the responsibility of the co-legislators to adopt it as it is or modify it. So in a way, the right level now to forward these kind of reflections is the level of the co-legislators. That being said, I think at numerous occasions, we recalled that the AML landscape is based on a precisely risk-based approach. And if the risk level is deemed to be low or lower than for other entities or other activities, well, then it will be the right and in fact the duty of the supervisors to apply simplified due diligence. Yeah, so that is what I can say. But in terms of listing as obliged entities, AISPs and PISPs, for the reason DF mentioned before, being payment institutions, are part of the set and the list of obliged entities. And in fact, some of these obliged entities are not typical actors of the financial world, like lawyers, auditors, accountants, but I mean, in a way, they can all see money flows, and AISPs as well can see money flows, having access to payments accounts. I mean, things can be seen when accessing a payment account, and things can be reported if something has been seen. So, I mean, this is part of a of a web of tools, and I should even say weapons, because it is a fight here. It might even be a war. So everyone has to play his role. I know some around this table think they have much less of a role to play, if any role at all. But well, that is not what the Commission considered in its latest package proposed in July. But again, it's only a package. Let's see. If you believe you've got a good claim and a good case, well, do convince the co-legislators. But as far as we are concerned, we believe that although we all take your points about less risk, still you are part of a broad ecosystem of firms being somewhere, having a role somewhere in money flows. And money flows means potential AML. So again, but let's see in the future. I mean, let's see in the future. But for the moment, based on the risk-based approach that has been taken by the Commission, these entities, including yours, Fanny, are covered. But again, yeah, I don't have a crystal ball. I don't know what will happen at the end of the co-decision. But yeah, that's what I wanted to say.
Thank you. That's very clear, Eric. Maybe on the point of TPP still. So Fanny, Dirk mentioned earlier about the consultation, which is ending this week on the 25th. next week. So maybe, there was a comment around, well, the TPPs don't really like the proposal, so maybe there is not going to be a change. Can you maybe, see or kind of share any views you can share with us and Dirk and obviously Eric and see, what kind of it is that you wish for from that consultation?
I'm sorry, I'm not sure to whom this question is.
Funny, sorry.
Oh.
So I didn't know. Sorry. Thank you, Hartwig. First, I would like to be clear that, and I will maybe not just speak in the name of Banking and Bridge, but because we had a call yesterday with the French TPP or the French CPP. So what I can say is that we welcome the EBA initiative. We think it's nice that the EBA has the courage, because it's kind of courage, to deal with the SCA matter, which is not an easy one. We all know that the PSD2 was written at a time where the situation were different. So we have this legal text, and that it's not easy to propose a modification of the RTS with a level 1 text, which were written maybe in a way we wouldn't do it now, but it's easy to say it 10 years after that we will have done this change in a different way. So first, we welcome the EBA initiative to do that. I would also like to say that we think it's really nice and positive that the EBA proposed a mandatory exemption for SCA. I spoke with the AML about the difficulty of not having level playing field in different countries. I think it's difficulty not just for fintech, but also for the client, which doesn't understand why it's not the same rule everywhere. So why do we have 3 months exemption in France and not when we don't have all the time a 3 months exemption of SC of the strong identification in France, while we have it in Germany, and while in Spain it will be also quite different. So we really welcome the fact that the EBA say that it will be a mandatory exemption and a level playing field for everybody, for banks, for fintech, for clients. You can be in all the European countries, it will be the same rules. So we think it's quite positive. Maybe we will propose in our answer, if it's to also make it clear that this mandatory exemption will apply for all kinds of payment accounts, because we can start to hear some French banks saying, yes, okay, for mandatory exemption, but just for retail accounts, but not maybe for corporate accounts. Okay, we would like the same rules everywhere, clear rules concerning strong authentication. And I think it's good for safety, if I can say so, to have clear rules everywhere for everybody. So not just for this kind of accounts and not this one. And as you know, you don't have, I will go further, you don't have a definition at a European level of a payment account. So if you start to say that depending of the definition of a payment account in European countries, the SCA will be mandatory for this kind of account and not this one, it's once again really difficult for everybody. It's not clear, and when it's not clear, it's not good for safety. So we really welcome the idea of the EBA to have simple rule, same rule everywhere. If we would like it for all payment accounts, and not a difference if it's retail, not retail, corporate, not corporate, and what does it mean. So we really welcome that. The only thing, if I can say so, so it means is that as this strong authentication of the information of bank account is so bad for our activity, I can give you numbers, but it's really bad. We lost 60 to 60% of our clients because of not of the first strong authentication, because we think the first one is just normal, it's good for safety. But for the renewal of the strong authentication, we lost 30 to 60% of our clients. So it's just a fact, it's just a nightmare. The cost of the cost of the acquisition of a client increase of 30%. So it's a lot. And 50% of the complaints we have from our clients are related to the strong authentication, because unfortunately, it does not work as it should work, the strong authentication. And we spoke about the cards, the fact that the bank were late and because it was not also working strong authentication for the cards. So we have to deal with the fact that strong authentication is not something simple, which work really well, but something which is difficult and which do not work well, even if the quality is growing and it's getting better and better, but it's not working quite well. We have 50% of the complaint linked to the quality of the strong authentication. So it's because of this impact, really bad impact on activities, that the only disappointment we have concerning EBA consultation is that we will like longer period for the renewal of SCA. Of course, in an ideal world, if it was possible, we would like no renewal of strong authentication. But I come from a bank and I'm quite pragmatic, if I can say so. I'm used to work with pragmatic people, and we have the text and we have to deal with this text, and EBA is obliged to take in account of this text. So in a wonderful world, we would like not having this renewable authentication, but at least if we have this renewable authentication every year, we could deal with a negative impact on our business. So it's a small, only the small thing that we would like to say concerning EBA proposal. 6 months, it means our business will still be really negatively impacted. 1 year, we could live with it. Okay, we could live with it. It's not the best we can have. We would like more, but we could live with it. So I think it's the only thing concerning this consultation.
Thank you, Fanny. I think that was very clear. And I mean, obviously, I would love to see the reactions of Eric, maybe, and Dirk. But I think it will have to go on the wish list for now, because there's a lot of interest in the topic on fraud and strong customer authentication. So, Fanny, I think this point was really clear. And yeah, let's see what the outcome of this consultation is. Maybe Marcel, back over to you. I think it would be really good to hear some more insights in terms of, you know, how you have observed, let's say, maybe fraud developments since the introduction of SCA requirements. How well does it work? You know, you already kind of gave a high level overview, but also what you've seen in terms of, you know, where fraud has been going. Have fraudsters stopped, or have there been other developments, and just really, you know, give it a good sense as to, you know, what you know, the industry's perspective is 1 year in to, I mean, full SCA, let's say. And then obviously there is another question, which is then for Eric and Dirk as well, which is whether we are going to you know, maybe change the approach overall from SCA as the standard, as the rule, towards, you know, maybe a different approach which gives some more flexibility. But maybe Marcel, let me pass on to you now for an industry perspective.
I share a lot of the comments that Fanny made on SCA, but let's not go too deep in that. 3 years ago, we were in a panel discussion as well, also moderated by you, Hartwig, and I gave the example of a French tollway. If you would remove contactless payments, but have to get out of the car, make a copy of your passport, and do a swipe of your card, it would be a very safe transaction, but nobody would use that road anymore. This is what I see happening in certain areas, not everywhere, but the best example is on January 3, I think, of this year. We were contacted by one of our merchants who is very active in the Nordics, specifically in Norway, and he had customers that couldn't pay anymore. We reached out to, it was one particular bank that had implemented strong customer authentication directly. Very well, because it works, but their customers were also complaining that they were not able to pay anymore. And I think within a couple of days, they turned it off and slowly implemented it again. I think it works both ways. For security, of course, it's great if you want to make sure that someone has the card present and you have a code, or you have something like an iris scan on your phone. Of course, you decrease the likeliness that there is fraud. But what we see happening right now as well is that people understand how SCA works and they try to work their way around. So they try to do transactions anyway, or they try to make a one-time transaction a recurring transaction, and it's basically from different points of view. The fraudsters are trying to get around it, but also merchants are trying to get around it because they want to save their conversion. What we try to do is solve it on a more technical way. So we look more at the device that is connecting to us. We know where it is. We know what time zone it is. We know the language of the browser compared to the country where they are in, for example. These kind of things are not the payment method related, not card related, but really customer related. So we try to understand if the customer that is on the page at that moment could be fraudulent or not, and try to decrease the fraud there. Of course, that's then limited if then we are not able to take the risk-based approach where we are convinced that this client is true and is okay, that we still need to do an additional authentication on that specific transaction. I mean, it works both ways. I think the discussion on SCA should continue, but it should never be the case that it hurts business, because if it hurts business, in my opinion, especially in the numbers that Fanny raises, per definition, it's not a good instrument. And if you connect the SCA to certain exemptions and on fraud rates, for example, who is determining what is fraud? Is that the issuer that decides that is fraud, that's speaking to the customer that claims that is fraud? Is the customer honest, or is he lying because he wants his money back, or he's not happy? If he's not happy, is it fraud or not? I still see that there's a lot of room to improve on that perspective. That if I would call my bank with a transaction on my card, I am able to convince this customer service representative that this was a fraudulent transaction, and they will mark it as fraud. I can be lying, and that's also fraud. But then the acquirer should not be to blame for that. The cardholder should be. So it's a very difficult discussion. We have it all the time. We have merchants complaining. We also explain it to them because we support to a certain level that there should be some security in there as well, because it's all there. But I think we should still leave it to the regulated entity that is accepting the transaction in a risk-based approach, because they should be the ones checking their customers and not the issuer itself.
Yeah, I think maybe Dirk, before I pass on to you, maybe just you know, two aspects. So one is obviously, I think there is no one that really questions that, as you say, SCA works. It does the job of securing transactions. The main question really is, I mean, how much more does it add in terms of security to what could potentially be achieved with transaction monitoring and fraud prevention tools that are working seamlessly in the background without the customer having to interact? And then I think you know, the topic on different types of fraud, you know, is also something that we need to take in mind and keep in mind, actually, because the fact that it just does not go through or through a card transaction, maybe, you know, there are different types, and I think it would just be good to also see, you know, whether you have seen a shift or some sort of you know, what you observe from the market maybe as well. Marcel, for you.
So yeah, what I see as a shift in the market on our processing side is that merchants start to accept more SEPA transactions rather than card transactions. So they try to convince their customers to move to a bank transaction instead of a card transaction, which takes more time, even though SEPA Inst, of course, would be the great solution for that because money is in directly. It's safer for them because they have a better conversion, and there's even though there's the less risk of a chargeback in that case, they just like to be sure on what's happening, and if someone wants to pay, that they're actually able to pay. So that's a shift that I really see happening. That's companies like Klarna and just direct payments to SEPA transfers are increasing.
Thank you. And now over to Dirk and Eric.
Yeah, if I can make a start very briefly, because I want to respond to some of the things that Marcel said, but also that Fanny said, and probably a few corrections, or maybe I've completely misunderstood what was said. So Fanny, when it comes to payment accounts, you said that there is no definition of what a payment account is in the PSD2. There is a definition of payment accounts. Even more relevant, we by now have actually a judgment of the European Court of Justice on what a payment account is. So it's absolutely clear there's nothing that needs to be rectified. With regard to your comment about you would like to see the RTS amendment that we are proposing at the moment to be applicable to all, and I wasn't quite sure whether you said to all accounts or to all payment accounts. So to be clear, it of course will apply to all payment accounts because that's the scope of the directive and that's the scope of the RTS, and therefore also the scope of the amendment to the RTS. So if we are receiving that as your response, then we need to see whether there's anything that needs to be made clearer. But for us, it's of course legally, from an architectural point of view, it's absolutely straightforward. That this applies to all payment accounts. If you are thinking about all accounts, so other types of accounts that are not payment accounts, then of course this will not happen. They're even outside of the scope of the PSD2. TPPs, I think this should be clear by now. It's one of the key things that we sorted out 4 or 5 years ago. TPPs under the PSD2 have no access rights to get data other than that is required to carry out payment transactions. And it may or may not be the case that under the PSD3 or open finance more generally, the proposed commissions are working on, that of course will be extended, but that is the legal situation for now. But we look forward to receiving your reply, Fanny, to see if there's anything else that we need to do or can do and or need to clarify. So that's my comment on that. So I have 3 comments. That's the first one. The second one was on Marcel. And I'm not quite following your example about 3 years ago, there were toll roads and people had to get out of their car to do a passport swipe or whatever it was. And that was too cumbersome. Not sure what that example is about. The RTS, ever since it was developed by us in 2017, contains an exemption, not the 90-day exemption, but the exemption for contactless payments or unattended terminals, such as those used in toll booths, and that was always in the RTS that there would be no SEA required for those cases. So I'm not quite sure how you come up with that example that you've come up. If so, then potentially the payment service provider didn't read the rules. I don't know which one would be applicable there, but we never required that to be done. And then the third and final comment on fraud more generally. I mean, the claim that everything could work so fantastically if it was just left for financial institutions to do transaction monitoring and we don't actually need SEA. Yeah, of course, we've heard that already 3 or 4 or 5 years ago. But we need to be aware of the market. The market has 4,500 banks and has around 2,000 payment institutions, electronic money institutions. I really doubt whether all of these are really capable of actually doing transaction monitoring to the level and the quality level that's actually required to really make that the rule approach. They are not, and we know it. And that's not an accusation, that is just an observation, because some of these payment institutions are really very, very small. And of course, it could be that these systems are just running in the background, and actually you can buy these systems off the shelf. So even small entities can use them. But then there's also quality issues in the system, in these background systems as they are running. So we have no confidence in transaction monitoring to become the default way how fraud is being reduced. At least under PSD2, of course, it's clear that that is not happening, and under the RTS, that's also clear. There is, of course, a still outstanding question, and it's a bit of an elephant in the room. And just to conclude with this final comment, and that is fraud levels. How are fraud levels actually evolving in the EU? And the ECB has published its report on card fraud just a few weeks ago, but that relates back to 2018 and 2019 or 2019 data. So that was prior to SEA. Eric very briefly mentioned some very limited statistics that we published in June this year as part of the report on the readiness of the industry to comply with SCA for electronic card-based transactions, where the industry was asleep for many years. And there it's only a snapshot, but we already give an indication that for 2021, in that period, actually fraud decreased significantly by around 40 or 50%, depending on whether you look at the issuers or the acquirers of the in the payments market. And that, of course, coincides with the rollout of SCA. I do not want to claim that there is a causation at this stage, because it's too early to say that, but there is a coincidence. It coincides with the introduction of SCA, and it coincides with the introduction of SCA. That was actually a rollout that was not even yet complete by that time, because there were huge delays on, as I just said, on SCA implementation. So there's still an elephant in the room, which is what are actually the fraud levels, how they are evolving, because it's a key check for us as a regulator as well, whether our requirements actually achieve what they were meant to achieve, the security related requirements, that is, under the PSD2. Are the fraud levels going down? Are they low? Will they become low under SCA? So there's still something that we need to show to ourselves and also to external stakeholders like the audience participating in or attending today's conference. And as a first little teaser, we are aiming to issue what is probably going to be a discussion paper. And if we are lucky, it will be by the end of the year. So people can take this as their Christmas reading home and hopefully entertain themselves with, where we are going to be exposing to external stakeholders some of the data that we are receiving, not everything that we are receiving yet, because there's still some data quality issues, because we are only ramping up these reporting requirements at the moment. But we are going to be exposing some of the things that we are seeing under the guidelines, the EBA guidelines on fraud reporting, to make it available to external stakeholders, not only those that we think the data and the analysis that we think is interesting, but also some of the things that we are seeing are not quite plausible to us. We don't understand why we are seeing what we are seeing. So we would quite like to see the industry actually telling us how do they interpret the fraud data evolution that we are seeing. And it's a discussion paper, so there's no technical standard following or anything like that. It's just an innocent discussion paper for the EBA to receive some views from stakeholders about what we are seeing. If everything goes well, it will be by the end of the year. If not, then it will probably be January.
Thank you. You're famous for publishing documents just before Christmas and then asking
yes, I know.
whether they read them on the first conference in January. Thank you, Marcel. Obviously, there was a point for you to address, so you have your hand up. Please, short. We only have 7 minutes left, and I would like.
I do it quickly. Derek, thanks for the comments. First of all, the French toll road was a metaphor and not a real thing that happened. That's what I raised 3 years ago when we saw SCA coming and we were talking about the possible consequences. And in regards to your comment, yes, of course, I don't claim that other payment institutions are all capable of preventing fraud from happening, but I'm just raising the fact that we have so much more data on the customer than just the SCA that is being applied. That I believe, from my perspective, that we are perfectly able to determine whether a transaction is risky or not from the risk-based approach. I'm very much looking forward to the read at Christmas.
Excellent, thank you, Marcel. And then Eric, over to you.
Yes, on SCA, I have to be, of course, prudent because we are at the beginning of the review and not at the end. And I don't have a crystal ball, as I said before, but I think I have to manage expectations as well. I mean, it would be a bit bizarre if the EU institutions, after all this, heavy and sometimes painful for some, I hear, a migration towards SCA, if we were to turn our back to SCA in PSD3, that would be a bit strange. That being said, what is certainly going to happen, in my view, is that we are going to look at what innovation has brought in this field. And I have in mind things like biometrics, for example, or I have in mind things like non-physical biometrics, like typing patterns. I'm sure there is a wealth of new science there, which will certainly document and inform our work going forward. When I say our work, it's Commission, but also, of course, the EBA. So let's see what, as I said, science can bring, innovation can bring to further fine-tuning the EU rules. Let's also think about something else, which is that SCA might not be sufficient to prevent some of the modern means of fraud. And I have in mind, for example, the authorized push payments, the scams where people are, lured into believing they are dealing with a reputable merchant, and in fact they are dealing with a fraudster. And then what happens is that people in good faith share their credentials and authorize payments. So here, I mean, SCA won't help, because I mean, if this fraudster possesses the codes and the credentials of the people, well, then SCA is complied with in a way. So what I'm saying is that it might not be the panacea for everything. So we have to reflect, and I think there was a question in the chat about that. We are going to reflect whether our rules in PSD2 are still fit for addressing these new scams, these new means of fraud, which are spreading, unfortunately, very much. So there are some countries where mechanisms have been in place, for example, to check IBAN names, you see, see if they match. There are. I'm not saying ultimate solutions, but there are means of limiting the impact of these frauds. And I have in mind the Netherlands, which I think have managed to bring figures to a very, to a significant reduction because of mechanisms they have put in place to reconcile, to verify that IBAN and names match. So that's an idea. We are going to look at that. No doubt. We are like you. I mean, we are observing the, it's this everlasting fight between the sword and the shield, and we are on the shield side, but we have to be aware of what the swords are creating, are developing. So we are very, very keen on receiving input, data, advice on how to deal with these new means of frauding, and also advice and data and comments on how to further refine SCA. I heard a lot of discussions today about SCA exemptions. Let's not forget that these 90-day rule and all this, these are exemptions to a rule which we consider to be of primary importance. So we should not be in a situation where exceptions outweigh the rules, and the rule have become almost redundant. So SCA is good. SCA is already showing its benefits. SCA is already replicated in other parts of the world after our experience. So let's not throw it away, but let's see what can be improved. And as I said again, innovation would certainly be a very, very strong help to regulators in that matter. Back to you, Hartwig.
Yeah, thank you very much, Eric. I think we are reaching the end of this session, and allow me. I mean, obviously there is still a lot to discuss, but I mean, maybe the last words to you, Eric. On PSD3 and what you feel, where it will sit in the overall framework, in terms of importance. When you look at all the initiatives, everything that is happening in the financial sector, we are talking about open finance. So what will be the role of PSD3? Will it be a new driver? Will it be maybe following just your ambition maybe on what you want to do with PSD3?
What we want to do with PSD3, again, I have to take a precaution here. Do not leave this conference thinking there will be a PSD3. There might not be, because we are going to do a review which will conclude, maybe or maybe not, that a PSD3 is needed. Assuming there is a PSD3 which is deemed necessary, I have already mentioned a few domains which I believe should be addressed in such PSD3. I mentioned before the level playing field. The same business, same risks, same rules. We have seen the emergence of new actors, new players, new companies, GAFAs, big techs, fintechs, hybrid companies, with some regulated services, some not regulated services. This has to be certainly looked at in the context of a review, and maybe in the context of PSD3. Have we got it right almost 10 years ago? And or should it be modified? Let's see, that's first thing. Second, I mentioned the articulation with other fields. EMD, should we continue having an EMD or e-money directive and a PSD, separated, or should they be, merged in one payments regulatory framework? And also, what about MiCA? Those of you who are following the discussions on MiCA and DORA know very well that they mentioned a lot the name PSD2 in these discussions, because some of the issues discussed in MiCA and DORA probably will have to be examined in the context of PSD. Even the stable coins, and crypto assets. I mean, they are not considered to be funds today within the definitions that we have. So, I mean, there will be adjustments to be made. That's very sure. And how far will that go? Well, remains to be seen. But of course, we are going to have a look outside PSD when modifying PSD2, because PSD2 is part of an ecosystem which goes far beyond. I also mentioned open banking, open finance. Of course, as I said before, PSD2, the open banking a la PSD2, is probably the first stage of a rocket, or the first floor of a house, if you wish. We can add further floors, further stages. Full open banking, not only limited to payment accounts, but other bank accounts, or open finance, investment accounts, mortgage accounts, even insurance services. All these services are more and more increasingly relying on data. So maybe that can be new business models that can be designed, that can be conceived based on these data. A bit what was done for PSD, or in the context of PSD, could potentially be exported. But let's be very clear, if we were to do that, we have to be aware of all the lessons, we draw from PSD2 experience. It would be bizarre to continue building a house without having made a kind of verification that the foundations are solid and are the right ones. And then I said before, fraud, consumer protection, liability rules, maybe we'll have to have another go at that and see whether, again back to the shield and sword metaphor I took before, see whether our arsenal of safeguards are sufficient, knowing what we know now about scams, fraudsters, etc. So yeah, that's what I want to say. But again, watch that space, because I mean, and you will be all of you contributing to that in one way or the other. Public consultation, more targeted consultation, conference like today. I mean, 2022 will be the year of PSD2 review. So you can already prepare yourselves. And in fact, it's already started, because we have already taken some steps. We've already published tender specifications for a study which hasn't yet been attributed. We've also started a dialogue with our good friends from the EBA, and there will be a public consultations, and there will be the whole battery of tools. And I repeat, I said it before, we are taking our time. This is not something which has to be done, light-heartedly. I mean, these were sometimes painful rules to introduce, so we are not going to, in a snap of the fingers, going to change them or propose to change them without thinking, without assessing, without reviewing, and that's what we are starting to do, and we'll take our time. Thanks.
Thank you, Eric. So what we can all write down is, 2022 will be the year of PSD2 review, and we don't know yet whether there will be a PSD3 at the end of this process. So as you say, stay tuned and watch this space. And with this, I would like to conclude this session. A big round of virtual applause for, and a big thank you to the panelists. So thank you very much. It was really, enjoyed really the session, and I hope the audience did too.